Module 4, Crafting Capital Raising Strategies and Investor Engagement. 1. Strategic planning for capital raising. Raising capital begins with a clear strategic plan that defines objectives, assesses funding needs, and establishes success metrics, funding objectives, determining whether capital is needed for expansion, product development, working capital, or acquisitions. Capital requirements. Analysis. Calculating the precise amount of funds required, taking into account operational needs, risk buffers, and projected growth. Business stage alignment. Tailoring strategies to early-stage startups, growth phase businesses, or mature companies. Investment timing. Identifying optimal funding windows to leverage market conditions, investor sentiment, and business milestones. Cost of capital considerations. Understanding the trade-offs between debt, equity, and hybrid instruments to minimize financial risk and maximize returns. This phase ensures that businesses raise the right amount, at the right time, from the right sources. Second, developing investor-focused materials. Investors require high-quality, data-driven information to evaluate the potential of a business. Module 4 covers business plans, detailed documents outlining strategy, market analysis, competitive positioning, operational plans, and financial projections. Pitch decks, concise, visually compelling presentations summarizing value proposition, growth potential, market opportunity, team expertise, and financial highlights. Financial models, forecasted income statements, cash flows, balance sheets, and capital utilization plans. Investor packages, combining legal documents, term sheets, risk assessments, and governance structures to present a professional and credible proposal. You will understand how to balance comprehensive detail with concise communication to capture investor interest. Third, investor segmentation and targeting. Effective capital raising requires strategic targeting of investors who align with the business's vision, stage, and funding needs. Angel investors, early-stage, high-risk tolerant investors seeking equity and advisory involvement. Venture capital firms, professional investors targeting scalable, high-growth businesses. Private equity firms, investors focused on mature businesses with strong cash flows and operational efficiency. Alternative investors, crowdfunding participants, P2P lenders, and corporate partners seeking strategic or social impact alignment. The module emphasizes profiling investors, understanding their motivations, and tailoring communication strategies to maximize engagement. 4. Negotiation and deal. Structuring. Once potential investors are identified, negotiation and deal structuring become critical. Valuation negotiation. Establishing a fair market value to balance investor returns with entrepreneur equity retention. Term sheets, outlining investment terms, rights, obligations, and exit strategies. Governance structures, defining board composition, voting rights, and decision-making protocols. Financial covenants, ensuring operational compliance, reporting obligations, and risk mitigation measures. Incentive alignment, structuring deals to motivate both founders and investors for long-term success. Module 4 teaches how to approach negotiations strategically, minimizing conflict while maximizing value creation. 5. Investor relationship management. Capital raising extends beyond securing funds. It involves ongoing engagement and relationship management. Transparent reporting, regular updates on performance, milestones, and financial metrics. Communication protocols, structured engagement through meetings, reports, and informal updates. Conflict management, addressing investor concerns proactively to maintain trust. Future funding opportunities, leveraging positive investor relationships for subsequent funding rounds. You will develop the mindset that investor engagement is a long-term strategic activity, not a one-off transaction. 6. Risk management in capital raising module. 4. Integrates risk assessment and mitigation strategies. Financial risk, ensuring capital structure does not overburden cash flow. Operational risk, aligning fundraising timelines with business readiness. Reputation risk, maintaining credibility through transparent, ethical engagement. Regulatory compliance, adhering to securities laws, reporting standards, and contractual obligations. The module emphasizes proactive identification, assessment, and mitigation of risks to safeguard both the business and its investors. 7. Learning outcomes of Module 4. By the end of Module 4, you will be able to develop strategic capital raising plans tailored to business objectives and growth stages, create investor-ready materials including business plans, pitch decks, and financial models, identify and segment target investors to maximize alignment and engagement, negotiate investment terms and structure deals to balance equity, control, and risk, implement investor relationship management practices to foster long-term partnerships,